Kevin Hincks is with me, co-host of Fast Market Live at the CBOE, to talk about the winning streak that was, right? That's a big deal. Also, you know, I was hearing about Scott Bessent from the Milken Institute conference in California, and he was saying sort of stay the course, don't bet against America. There was some optimism there, but the winning streak ended yesterday. Some of your thoughts?
Good morning, Nicole. Yeah, as we break a 9-day winning streak, the market did try to rally at the end of the day, just fell a little bit short, didn't get to that 10th day. But today, there's a little apprehension ahead of a 2-day Fed meeting. Why? Well, I think the new question is which Jerome Powell shows up tomorrow, Nicole. Is it going to be the Jerome Powell that historically gives information to the markets that they like and the markets view as positive? Or is it the Jerome Powell that showed up at the Economic Club of Chicago a week or so ago, didn't stay out of politics, didn't stay out of forecasting, went to those places, and the market really didn't like it, as you know. So that's what is coming up on the horizon, making the markets a bit jittery. But if Jerome Powell talks about the strength of the U.S. economy, like jobs and unemployment, if he talks about lower inflation that we've got out of wages in the non-farm payrolls, CPI, PPI, and PCE, all coming on the downside, crude oil on the downside. Remember, crude oil, since April 1st of this year, crude oil was at $71. So it's down about 20% in the last 5 weeks. That's really good for the fight on inflation. But how does Jerome Powell say it? Tomorrow, he's not expected to do anything with interest rates. As you know, there's basically a 5% chance they move on interest rates. But his press conference, where he sets the tone for June and the rest of the year, that's the important part of tomorrow's meeting. And that's what has markets a bit jittery going in, or at least stopping the recent momentum. But President Trump's meeting with Mark Carney, the Prime Minister of Canada, today. Hopefully that will bring down some of the tension there. I think any day that we can get Scott Bessent to speak like he did yesterday is a good, solid day, as he gave a really positive message about the U.S. economy. We got a trade deficit in goods and services that was higher than expected and higher than last month, but that was pretty much built in to the markets, as you know. So all things considered, day one of the Fed meeting, we wait. Market's a little softer. Palantir's earnings. Tesla's got some weaker sales in Germany that the market's dealing with, but not a big number on the downside, but certainly a down opening, Nicole.
Yeah, and we'll watch for all of these names for earnings. I was thinking about the Fed, and, you know, yesterday we were hearing from Jan Hatzius from Goldman Sachs saying they expected 3 cuts, and they expected those to come in July, and also July, September, and October. By the way, the July likelihood of a cut right now, when you look at Fed Funds Futures, the tool is at about 78%. If you're hoping for May or June, that seems a lot less likely, but it was interesting to hear about the possibility of the 3 cuts from Goldman Sachs. As we turn our attention over to earnings and what we're hearing from the CEOs, Ford pulling its numbers, Mattel clamoring to hold off on those tariffs. Some of your thoughts?
Yeah, I think the tariff talk is still going to be out there until we get some resolution. Now, we did get some positive. India came out this morning and said their U.S. trade negotiations going extremely well. But again, Nicole, this market is waiting for announcements of trade deals signed. We want that flow of trade deals. If you've got 17 key trade partners. You know, Scott Bessent already said they're putting China off to the side. That's a longer negotiation. But if you've got 17 trade partners that are negotiating, let's get some on the board and let's start announcing them as we get into this week and next week. So that's what I think the market is getting a little frustrated with, that we haven't seen any announcements. Now, Kevin Hassett mentioned a couple of weeks ago that they're debating whether to release them one at a time or in a group. I would say the minute you get one, release it and announce it, and let's get some positive story momentum in this market, because Palantir's down pre-market, Tesla's down a bit pre-market. You know, you've got AMD and Supermicro coming out after the bell today. You've got Uber and Disney tomorrow morning. Those are some big names. So I think there's a lot going on here, but no real top-tier economic data We're waiting for the Fed, though. It's all about Jerome Powell for the next, let's call it 36 hours, Nicole.
Oh, yeah. I mean, I'm looking forward to it, and hopefully he doesn't crush the markets the way he did last time. I mean, I guess if you're a bear and you're short, you'll be happy. There's a trade for everybody. I never want to leave anybody out. As I think about the big picture here and where we are in the rate environment, I mean, what are we hearing? I mean, right now we're at 4.33%. How are people feeling? Mortgages, what they're spending on, et cetera, et cetera. I mean, the rate's been pretty steady around here for right now.
Yeah, a lot of the macroeconomic numbers, especially the 10-year yield, has been very stable, right? It hasn't been volatile like it was in the past. It's sitting currently, as we start the day here, 4.33%. Now, here's what, in order for Jay Powell to navigate a soft landing, which that's what he's been trying to do. It's a great theory, but it's rarely been done. I think as inflation comes down, he needs to do maintenance cuts in the Fed funds rate so that Fed funds rate doesn't get too restrictive, right? That's what you're looking for. You're looking for slowly bringing rates down as inflation comes down. You're getting the lower levels of inflation, and I look forward to the next CPI number because these energy prices in futures are going to be a big downward pressure on inflation as we get a big drop in crude oil. So that's going to be overwhelming. No matter what you talk about tariffs, on the way up when inflation was going up, it was energy. Remember, it was the Ukraine war. There were several things. It was OPEC with production cuts. Those are all reversed now. And so I think there's downward pressure on crude oil that is really positive for inflation. That's going to show up in the headline CPI numbers. But I think right now, for the next 24 to 48 hours, it's going to be about Jerome Powell's comments and how the market sees, how he sees the rates going forward. The dollar has been slowly creeping down. People are worried about the lower dollar. Look at the 20-year chart of the lower dollar. It's been significantly lower than this. And a U.S. dollar is good for U.S. multinationals. So that argument is kind of interesting. But all things considered, you've got a strong U.S. economy with inflation coming down. That's what Scott Bessent was talking about. We'll see how Jerome Powell frames this tomorrow afternoon.
Right, understood. And while some people are bullish and saying the lows are in, you have Paul Tudor Jones saying we're going to see new lows, even if Trump hits a deal at 50% tariffs for China. So we will see. Kevin Hincks, thank you.